over the course of time, they control the paper price of gold. Will they stop trading it? No, they won't, because that's the mechanism with Wall Street and the banks helps to control the visible price that you and I see. Even as those premiums expand, because when you're working in the physical realm of all this stuff, this is physical. There's a finite amount of it. So this is a true demand supply market, and demand is growing. If you've been watching my videos recently, I've been showing you that there's been a flight from fiat money products into the real thing. And I think it's just beginning, but I think that's going to heat up more and more and more. So no, I don't think they will stop trading paper gold, because they got to control the price. And if the price were purely dependent on the physical markets, the prices would be a lot higher. And if they did, would that be a setup to a reset? It is all, they're not going to stop trading them, and it's still a setup to the reset, because the system no longer functions. We need a new system. And the system that they're driving us to, well, if Klaus Schwab has his way, it's pretty ugly and nasty. And what I think is also really interesting is that all the talk right now is on deglobalization as the supply chain issues, continue to break down. And so they're deglobalizing the supply chain at the same time that the G20 and the World Economic Forum want to go into a one world money system and a one world system of control. So look over here at this deglobalization and don't realize that we're doing just the opposite over here with our monetary system. I'm telling you, you got to have physical. It's got to be outside of the system. It has to be. That's the only way you're going to really be able to protect your wealth and your purchasing power at all. And Hardcore NZ asks, hi Lynette, I have a lot of my retirement in GLD, which has saved me big time in this crash. Would it go up with gold, or is it paper gold and go down? GLD is simply a trust. That's all you own is a share in the trust. You do not own the underlying gold. It is designed to track the spot market. So whatever the spot market does will be reflected in your GLD. But Hardcore NZ, you gotta understand, you don't own gold. You own shares in a trust. You don't have the access to the underlying gold, whatever there might be in there. So, I don't own any GLD. And Edgar, we'll put up a chart, a relative performance chart of GLD versus spot gold. And I'll pull that up so that it's pretty current. And you will see that every single day, daily, read your prospectus, they sell off some of their gold holdings to pay the fees. They do this daily. You don't own gold. So in your retirement, part of what you're looking at here in your retirement is a lot of people will do, I don't know, you said in retirement, so maybe it's in an IRA or a SEP IRA or a 403B or a 401k. I don't know where you're holding it, and I can't tell obviously from this question. But I want you to think about the taxes that you would pay on it now while they are suppressing the price versus when they do that overnight reset system and gold begins its move toward its fundamental value, which is substantially higher than where it sits right now. What would you like to pay your taxes on? That's the question you have to ask yourself, because it's just smart planning. Personally, I had an IRA, I had a SEP IRA. I liquidated that. I still have a strong retirement plan, but guess what? It's in my possession and my control. and it's invisible to everybody. I paid my taxes. You got to pay that. But just think about it, right? I would rather pay it at the suppressed price than I would at its full fundamental value. Just saying.